Hello and welcome to Moving Iron Podcast. Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give all the loyal listeners of the Moving Iron Podcast two free things, Shawn. Not just one, but two. Ready? Ready? Are you ready? Can you handle this? One is you get one glove for your right hand and one glove for your left hand. Bam. Two free things.
Wow.
Some people call that a pair. I call it two free things. So if you're interested in getting that right hand glove and the left hand glove at the same time, send an email to marketing@axontire.com and they will send over a free pair of Axon deerskin gloves to help make your hands buttery soft year round. So check that out. Also, they're doing a cool thing too. It's the Moving Iron Summit this year. The first 150 people that sign up for the Moving Iron Summit, they get $50 off courtesy of Axon Tire. So check that out. Valley Transportation is hauling ag and construction equipment across the country for the past 33 years. Call Parker 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work today. Shawn is with Hackett Financial out of Boca Raton, Florida, and he is absolutely cool enough to come on a couple of times a week to talk about what's happening in the marketplace. So Shawn, how you doing, man?
I'm doing fantastic. Always glad to be talking ag on Thursday mornings with you. So.
That's my favorite day of the week to talk about agriculture. I'm not gonna lie to you. Probably even a little better than Tuesdays, just because you're closer to the end of that week. More things have happened.
For sure.
China's going nuts. Such things are just out of control. China is encouraging farmers to sell more hogs. So now you've got a super tight situation over there right now as far as the hog market goes. And this is the third article this week I've read about China encouraging and really jumping up and down to sell more hogs. If it's as tight as it's supposed to be, Shawn, why would they want to sell so many hogs?
They don't have the hogs to sell. They went through mass herd. Look, we've been talking about this for months now. That they had this mass liquidation. They lost a ton of money. They're finally profitable again. But they're not going to grow the herd, and they're not going to be aggressively, doing anything other than trying to repair the balance sheets that were just blown apart over the past 6 to 9 months when they were losing, billions and billions of dollars. So, once again, it seems like governments are trying to just find supply out of thin air, thinking that they can just print food. And it doesn't work that way. You actually have to provide an economic incentive over an extended period of time to do it. You just can't paper over some food supply problems by just saying, "Come on, farmers, you got to sell some more." It just doesn't work that way, and we're seeing it here in the U.S. Come on, oil producers, produce more oil. Just do it. Well, okay.
We were doing that once, and then you said we couldn't. And now you want
to, and so it's just not how you manage resources of energy and food. You just have to. It's big money, big capital, big investment, and you have to provide the long-term confidence and incentives to do it. And quite frankly, in the last few years, we've done everything but that. So until we do, supplies are going to continue to be not what the governments want, and they're going to continue to try to, go through these short-term makeshift policies that they think can work in the short run, but it's not going to do anything but make things worse in the long run. So China's a classic example. Just sell more hogs. Well, great. Not going to happen. So
I always say, just make more money and you're rich. You know what I mean? So it's that simple, Shawn. You know what I mean?
Well, simple. I mean, and one of our theses is, as you know, is that they're going to start coming for U.S. pork because they really don't have an alternative. And last week, we saw Chinese imports of U.S. pork triple. It's the first time we've seen the Geiger counter move like that. So it looks to me, and of course, the hog market is up 10 points here in the last several weeks. So, things are starting to get interesting on the hog front. It's been something we've been mentioning and talking about to be on the lookout for as we got, closer to this fourth quarter and end of the year. And things seem to be happening in the way that we've been suggesting, Casey. So.
Yep. Yeah. All right. So I know this is going to come to a big shock to everybody listening to this right now, and everyone's going to be like, I can't believe this, Casey. But Russia is contemplating whether or not they're going to continue to let Ukraine ship agricultural products out of the Black Sea. And I know that's shocking. No, I know everyone's like, oh, the big gasp in the crowd right there. But do you think, looking at that story, Shawn, and how that all's been playing out here of late, is a lot of that's baked in the market right now, or at the end of November here when they say, yep, we're not going to renew that deal, that you could see a big jump of uncertainty in the marketplace? Or do you feel like that's kind of already baked in?
For some reason, the market thinks they're going to extend the deal.
I don't know why they would think that. Just strategically, that makes no sense, but I could be wrong.
I don't know. There's a lot of meetings that go on behind the scenes. I know they were with Erdogan and they're working out something with setting up a natural gas hub. And I don't know. There's more to it than we're being told behind the scenes of why they would or wouldn't. But I certainly would be careful about being too bearish as we approach this expiration. I'm just not sure. You know what? It may ultimately be renewed, but there may be some kind of a delay.
Gotcha.
It's kind of like when you go on strike. You actually go on strike. There's and you really put the pressure on to negotiate, and then you come back on a few weeks later. I almost feel like they're going to do that. They're going to say, no, we're not going to do it. And then everyone's going to be squirming and everyone's going to be going up in arms. And somehow they might be able to, in that environment, cut whatever deal they're looking for or something closer to what they're looking for. And that could set a wild, obviously volatile trade in the wheat market for sure. So
right.
I just don't think I'd want to be bearish or heavily short. And if I'm a physical buyer of wheat, Casey, I just think I'd make sure I had myself, buttoned up going into that time frame in case we put $1 or $2 onto the market for whatever reason.
Yeah. I've read that article. This is about the third one I've read this week about similar topics around that. And it's just, I don't know, Russia just more or less saying like kind of what you're saying, like, no, we're not probably going to do this again. And I haven't said, no, we're not going to do it, but it's been like the likelihood of us doing this is pretty slim type of thing. So
I'm surprised they did the deal in the first place, quite frankly.
Yeah, me too.
Given what's going on, I'm still shocked that they let so much grain. I'm thankful they did it, but I'm just surprised they did in the first place. So who knows? Trying to predict those kind of things are difficult. All I'm trying to say is I just don't think it's going to be settled at the expiration of the current deal. I do think they're going to play hardball, which is what you're supposed to do in negotiations, is really put the pressure on. I can't think of a better way to put pressure on than to say the deal is not going to be extended and have a week or two where the market really sweats it out as we go into the winter months and that sort of thing. It just seems to me like that would be a logical posture for them to take,
Yeah. All right. Let's talk about energy, because energy has been on. I'll tell you what, of all the times I've been reading articles for this podcast in the last 2 weeks, I've never read more articles about energy, this energy shortage there, energy everywhere. So you got the Biden campaign. The Biden administration is still sucking oil out of the strategic petroleum reserves as fast as they can. And they're actually buying it now under the market, right? So the market's whatever it is right now, $80 or whatever, roughly right around there, $83, right around there. And the floor is at $70 a barrel right now. So there's some discrepancy there. But when you look at that situation there, then you've got the European Union, which we talked about last time, European natural gas, those kind of things. But now they're going to get together and talk about, hey, we're all going to collectively buy natural gas and we're not going to undercut or overbid, to make sure that, Germany gets more natural gas than France does or something like that. So then you couple that with what we got going on in the US. I mean, it's just, it is an absolute, I mean, soap opera of sorts in some cases about what this energy situation looks like right now. I guess, Shawn, as you're looking at guys that are, the guys you work with, and here we are in that time of the year where prepaying for inputs and those kind of things are going to start coming into play. When's the right time to prepay for what you got? I mean, there's just so many moving parts. It almost feels like you almost need to wait till the day you need it to make sure that to pay that price in, because who knows if it's right now or what it's going to be in the future and all those kind of things. So I guess as you're looking at the energy situation, Shawn, and inputs, what's your thought there, and how are you thinking about that?
It's the same that we just said before. Governments are trying to do things to solve problems without actually providing the incentives for more production. I mean, the way you solve the crude oil problem is not to dump SPR onto the market. The way you get, more crude oil to be produced, you create incentives. You let the price stay high. You make oil leases available again. You promote pipelines. You do everything you can to get those infrastructure investments going so that the supply builds and grows. What the heck is dumping this SPR going to do in the long run? It's going to do absolutely nothing except keep the price artificially low, disincentivize those investments, and deplete the strategic reserve in case there's a point where he actually really would have wanted it, right? So we know you can't run SPR down forever. At some point, they have to stop. What happens after they stop? Already, because the refineries are down, the capacity for refining is down so much over the last 3 years because of lack of incentives. Our diesel supplies are at the lowest levels since we've been recording them since 1954 in terms of U.S. Diesel heating oil inventories are at the lowest level since 1954. Well, what happens, what happens there? Diesel is like the driver of the U.S. economy, trucking and farm equipment. And, without diesel, you really have a hard time moving anything anywhere. And we're running those supplies down because we don't have enough refining capacity. Well, I hate to tell everybody, but if you don't have enough refining capacity, you're not going to produce any more diesel until you do. Right. So I don't know what the plan is, but the plan should be finding a way to increase refinery capacity as quickly as possible. Instead, what they're talking about, let's dump some more SPR. And if we have to, maybe we will, halt exports. Like we sell a lot of diesel to Europe and other places. And so we're just going to stop exporting LNG. We're going to stop exporting diesel. No doubt that would help short term, Casey, bring prices down. But if you bring prices down, what do? You're also kicking the can down the road. You're not making those investments. You're not increasing that production. And at some point, you make the situation that much worse. The real issue is we don't have enough energy. We need more. And you can't solve a supply problem with these makeshift operations and decisions that we're seeing, not only here, but elsewhere in the world. In Europe, capping the price that you pay, what is that going to do? Well, that doesn't help produce more oil. That just as a short-term fix. You have to have a long-term solution. I don't know. It's just the governments don't know what to do. They haven't thought this out. They're panicking, and they're actually making things worse. So
I didn't know governments did that. I thought they made everything better. That's what I've been told. All right. It's a mess. It's a mess. All right. Let's talk a little bit about what we see happening with exports right now. So it's Thursday morning, so export report come out this week or today. And I guess looking at the overall exports, everything seems to be kind of right on pace for what they would expect to see happen, Shawn. When you look at where we're at with stocks and where we see, Argentina's cut their week forecast again. We've talked about extreme drought down there for quite a while now. So I guess as you're looking at the overall exports saying what we see leaving the country, Shawn, any big surprises there with that, or do you expect to see that to ramp up at all?
Well, the real issue is how much can we export?
Yeah.
With the river shut down right now. I know they're trying to dredge it and trying to get things going again, but I mean, how much can we actually ship? How much can we actually move if we don't have the barge traffic going down the river like we're supposed to? I mean, obviously it's going to limit exports. Whether we may want to sell all the stuff and people may want to buy it, but if we can't get it out, then it's going to limit. I would focus more on shipments than the actual exports. We can put all kinds of exports on the books all we want. The question is, how much are we actually getting the physical supply shipped out of the country? I think those numbers are going to be disappointing, so long as this situation with the river is what it is. And then we keep hearing there might be another strike because this one union with the rails did not agree with the agreement that everybody seemed to have before, and that if we get to mid-November, we may go on strike again. And then I don't know, Casey. It's just I just don't think the shipments are going to be able to deliver on current USDA expectations based upon what I'm seeing. And that means that the numbers are going to have to come down at some point in future USDA reports, which means that the ending stocks numbers are going to be raised and the supply tightness is going to be easing a little bit based upon those factors. The other factor, and we've been saying this for quite some time, with the herd liquidation of animals here, the herd liquidation that occurred in the past year in Europe, and of course we just talked about the significant herd liquidation in China. Feed demand is not going to be very good at all, at least for the next 6 months before maybe we might see some thought about starting to rebuild the herd if profits continue to improve. So I look at that outlook on the demand side, and unless you really got a major weather problem in Brazil, I know Argentina's not so good, and their crop could be off a little, but I think if Brazil just hits the cover off the ball with big corn and big soybean crops against this kind of a demand situation, I just don't think the prices that we've seen in the May high and the recent highs we've seen here, Casey, in the last 30 days, I don't really see that we can go significantly above those levels without a major weather problem in Brazil that we are not expecting to see right now based upon our weather outlook. So
right on. Okay. Man, a lot of moving parts right now. All right. As you look at cattle one more time, we'll talk about the cattle market here just real quick. Looking at the cattle marketplace, cash cattle prices have been really on a tear this week. They've done some really good moves here of late, even better than what we've seen over the last month here. We've really seen some good cash cattle prices, but this last 2 weeks have been pretty really really good gains there. So Shawn, looking at that cattle marketplace, we still see that herd liquidation. We still see the number of cows coming through, getting ran through. You look every week, there's a few more that went through the slaughters and everything else. So I guess, Shawn, as you're looking at that, what are your thoughts there, and when do you see some of this slowing down a little bit?
Well, we had a big setback in cattle, and then now we're having a kind of a rebound rally off of that correction. We have some holiday demand coming in. As expensive as beef is, there still is a demand base that doesn't go away. And I also think this pork shortage in China is spooking the meat protein market a little bit, because if they're really that short of pork, then they're going to be looking for beef protein. They're going to be looking for chicken protein. They're going to be looking for fish protein. They're going to be looking for milk powder protein. I mean, they're going to be looking for protein. And I think that kind of shifted because everyone's been focused on the potential for weaker U.S. and global demand, which is happening. But the Chinese demand is really not economically driven, Casey. It's sort of the government just buying with money that they have to have enough protein on hand to keep their people fed, especially as they go into these important New Year holidays that come up in January and February. That's not really a decision based upon the economy. That's a decision based upon food security. And I think that's brought some optimism into the livestock markets. Because remember, the hog market caved in a few weeks back. I mean, it absolutely collapsed, and now it's rallying back. And then we had a big correction in cattle. Now it's rallying back, and it's all really starting to stem from, as you've said, these reports that are continue to come out about how desperate they are to try to keep this pork price down and try to keep this hog price down. And they these are actions by, that are pretty desperate, quite frankly. So I think that's changed the sentiment to where maybe the market is dialing in a little bit of a better demand situation, at least from China, that could override some of these economic weakness fears that have been were the basis for these corrections up to this point. And I happen to agree, that is the case, and what's one of the reasons why the hog market specifically we're pretty friendly towards it. Cattle market, I still think, it doesn't. It still is not as driven by Chinese demand as the pork side of the business is, but I think we could struggle a little bit more on the cattle side, but on the hog side and the pork side, I think it looks pretty good going into the end of the year. So,
okay, last topic, Shawn. You talked about this as Hurricane Ian went through Florida. There, you saw a huge jump in the price of orange juice. Talk a little bit about what you see happen with orange juice post hurricane here.
Well, we had the initial assessment, and then you have the assessment of the assessment, and then you have the assessment of the assessment of the assessment. So we're at that phase now where everyone is assessing what they already assessed to see if what they assessed was correct. Okay. Mm-hmm. And there was a report that said that, that the final assessment, might be on the higher side of the range of expectations that was out there. And so and remember, the November contract is coming up to expiration here, Casey. If you look at big peaks in OJ in the past, they've liked to top out as you approach expiration of the November contract. You go back the last 30 years and you look at, when did prices peak out or spike trade, especially on a weather problem. They've liked to do it leading into the expiration of the November contract, and then they turn down thereafter. So as an example, yesterday November was up, but January was down. So I think we might be developing some kind of a supply squeeze going into the expiration of the November contract. I think once that phase is over, which it will be over the next few weeks, I think that, the bigger picture is long-term damage to the trees was not done. It was mostly fruit drop. And a lot of supplies are going to start coming in from Brazil, who have substantial increase in production. And of course, demand is declining as of the last 4 weeks from Nielsen numbers. Orange juice demand is down in excess of 10% year over year. That's a pretty big number, Casey. So that's going to start to really feed into balancing this market off a little bit. So I guess what I'm getting at is we could still see some fireworks for the next few weeks, as you sometimes see as you get near the end of a deliverable contract like November is. But I think after that, I think we'll have priced all that in, and then we start looking at, increasing the availability of supply against demand.
Right on. Okay. Shawn, good stuff as usual, man. Folks want to reach out to you and get more information about what it is you got going on over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on there about how we do things, how we make our forecast, to see if that kind of information would be of some value to your listeners.
Right on, man. Well, I appreciate you being on the podcast, bud.
Thanks, Casey. Keep up your great work as always.
Thank you, man. All right. I'm Casey Seymour with Moving Iron Podcast. Make sure to check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and the ever so cleverly named Moving Iron Podcast YouTube channel. You can see the video version of this very podcast here. If you're interested in doing that, check that out. Hit Shawn up. Check out his website. He's got a lot of cool stuff out there to see. And if you like what you see here at the Moving Iron Podcast, follow me and like me on whatever podcast channel you got, and follow me on my YouTube channel too. That'd be great help. Get other people to see it as well. So Moving Iron Summit coming up here in Nashville, Tennessee next September. So we got quite a while yet, but September 11th through the 13th at downtown Hilton there. All the information will be up here directly here on the MovingIronLLC.com website. So check that out. So with that, I'm Casey Seymour with Shawn Hackett. Let's go this morning, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Move